everyone, welcome back again to my YouTube video. It's me, Talita Ria Brahmana from Accounting Department, University of North Sumatra. So today, I'm gonna present my presentation about accounting for consignment. I hope you understand what I'm saying and I hope you like my video. Thank you! What will we learn? There are 4 important things. First, definition of consignment. Second, characteristic of consignment. Third, reasons why we choose consignment. And the last is accounting methods for consignment. First of all, what is consignment? Consignment is type of business arrangement in which one person sends goods to another person for sale on his behalf, and the person who sends goods is called consignor, and another person who receives the goods is called consignee, where consignee sells the goods on behalf of consignor on consideration of certain percentage on sale. Next, there are 5 characteristics of consignment. First, the agent or consignee never owns the goods and the ownership will change when it's sold to buyers. Second, all the expenses incurred in connection to the consignment are borne by the consignor only. The consignee will not be held liable for any damage to the goods during transit. Third, unsold items will be returned to consignor and without cost financing for consignee. Selling price of goods according to agreement between consignor and consignee. Why we should choose consignment sales? For consignor, this is the effective way to marketing goods, especially for new products, expensive products, products whose price fluctuate greatly, products previously sold through dealers but not profitable. For specific products like grains, livestock, or produce, we can get some sellers who master the field. Control the sale price of goods, because maybe it's not possible to use other techniques. And the last is control over the physical quantity of goods, so the consignor can make product planning. And for consignee, first, not run the risk of loss even if the goods are not sold. Second, avoid losses due to damaged goods, goods that fluctuate in price, and expired goods, because it can be returned to the consignor. Not pay the cost of operating sales, like advertising costs, salesperson fees, and the last is no need a lot of models. There are 2 accounting methods for consignment. First, separated profit method. Profit or loss from consignment sales is separated from profit or loss from regular sales or another sales. Recording of sales transactions is made separately so that clearly the contribution of consignment to the company's profit. Second, non-separated method. Profit or loss from consignment sales is not separated from profit or loss from regular sales or another sales. Recording of sales transactions is not made separately, so the company cannot find out which one from consignment sales or nor another sales. In separated profit method, there are consignor's book and consignee's book. Consignor's book. On debit, there are expenses consist of send goods on consignment or consignment out, freight expense, commission expense, and all the expenses that paid by consignee but it will be paid by consignor. On credit, there are incomes, consists of income from consignment, consignment profit, consignment reporting sale. On consignee's book, in debit, there are expenses, consists of all the expenses that paid by consignee but it will be paid by consignor. Unearned commission income, consignment reporting sale to consignor, transfer money to consignor. On credit, there is income, consists of consignment income from commissions of goods sold or consignment in. For example, this transaction occurred between Harmer Inc. or consignor and Russo Inc. or consignee. Harmer Inc. left televisions for sale at 900,000 rupiahs per piece. Russo Inc. will get 30% of commission from the sold products. All the expenses incurred in connection to the consignment are borne by Harmer Inc. Cost of goods sold at 400,000 rupiahs. In 3rd June, Harmer Inc. sent 15 televisions to Russo Inc. 3rd June, freight was paid by Harmer Inc. at 200,000 rupiah. 4th June, all the expenses when the goods were received were paid by Russo Inc. at 100,000 rupiah. 4th until 30th April, all of the televisions were sold by Russo Inc. 30th April, Russo Inc. submits a sales report and send money from the sale after deducting the cost. The entries to record all these transactions between consignee and consignor are: first transactions. This is the separated profit method. Harmer Inc. delivered of 15 televisions for sale at 900,000 rupiah, cost of goods sold at 400,000 rupiah to Russo Inc. And consignor's book or Harmer Inc. On debit column, there is consignment out 6 million rupiah, and on credit column, there is goods sent on consignment 6 million rupiah. On consignee's books or Russo Inc., there is a memo, receipt of 15 televisions for sale at 900,000 rupiahs per piece, will get 30% of commission from the sold products, and all the expenses will borne by consignor. Second transaction, being freight at 200,000 rupiah by consignor. On consignor's book or Harmer Inc., on debit column, there is consignment out 200,000 rupiahs. On credit column, there is cash 200,000 rupiah. And on the consignor's book or Russo Inc., there is no entry. In consignee's book, consignment in for 100,000 rupiahs on debit. On credit column, there is cash 100,000 rupiah. And the third transaction, all of the televisions were sold by Russo Inc. and calculate on Russo Inc.'s commission. On consignor's books, there is no entry. On consignee's book, there are cash on debit column 13,500,000 rupiahs. On credit column, there is consignment in 13,500,000 rupiahs. It's from 900,000 rupiahs multiplied by 15. Next, consignment in for 4,050,000 rupiahs on debit, and on the credit column there is commission 4,050,000 rupiahs. It's from 30% multiplied by 13,500,000 rupiahs. And the last transaction is reporting and remittance of sales results from consignee to consignor. On consignor's book or Harmer Inc., there are on debit column cash for 9,350,000 rupiahs, consignment out for 150,000 rupiahs. On credit column, there is consignment out 13,500,000 rupiahs. Then consignment out 3,150,000 rupiahs. On credit column, there is consignment profit 3,150,000 rupiahs. It's from consignment out on debit minus consignment out on credit. On consignee's book or Russo Inc., consignment in 9,350,000 rupiahs on debit. It's from consignment in on debit minus consignment in on credit. On credit column, there is cash 9,350,000 rupiahs. The difference between spreaded method profit and non-spreaded profit method in the first transaction, there is just a memo on consigner's book. Sun 15 televisions for sale to Russo Inc. at 900,000 rupiahs, cost of goods sold at 400,000 rupiahs. And the second transaction, the difference is in freight expense, 200,000 rupiahs on debit, change from consignment out. In the third transaction, it's changed from consignment in on debit into Harmer Inc. on debit. And the fourth transactions on consignee's book, it changed from consignment in on credit column, changed into sales for 13,500,000 rupiahs. And it changed a lot. Per case, 9,450,000 rupiahs on debit. On credit column, there is sales 9,450,000 rupiah. It's from 13,500,000 rupiahs minus 30% multiplied by 13,500,000 rupiahs. And the last transaction is on consigner's book, cash 9,350,000 rupiahs on debit, assembly line expense 100,000 rupiahs on debit, commission expense 4,050,000 rupiahs on debit. And on credit column, there is sales 13,500,000 rupiahs. On consignee's book, Harmer Inc. for 9,350,000 rupiahs on debit. On credit column, there is cash 9,350,000 rupiahs. This is the last slide. If you have any questions, please drop it on comment below, and please give me some thumb likes and subscribe my channel. Thank you.